Hello and welcome. You tune into Market Cafe. I'm Ankita Saxena and with me is Ashesha Advario. In the next 1 hour, we'll take you through what transpired in the global markets and the cues you need to watch out for before the start of D3 today. Now, yesterday, Ashesha, we did see a sharp sell-off in the Indian markets. There was bloodbath. In fact, on the comments that are coming from US President Donald Trump on imposing tariffs on countries that do not support him in his Greenland escapade will face tariffs. And on the back of that, there has been a lot of global uncertainty, and that is leading to the fall in the market. In fact, yesterday for global markets, for US markets also, there was a sharp decline that came in. Dow slipped almost 870 points. That has been the sharpest fall since October for Dow Jones Industrial Average. In fact, that was down 1.8%. S&P 500 lost roughly 2.1%. A drawdown in tech stocks also led to a sell-off in the Nasdaq that slid almost 2.4% on the day. And all the three benchmark indices logged their worst daily performance since October 10th. And the sell-off also dragged the S&P 500 and Nasdaq into the negative territory for 2026. Now, the so-called, Sell America trade on Tuesday was accompanied by a spike in the US Treasury yields also and a decline in the dollar. And because the 10-year Treasury yield also spiked up briefly, that topped 4.3%, that was trading at the day's highs. The markets also saw a downtick of a cut of almost 2% as far as US markets are concerned. So that is how largely the US market shaped up. And if I look at the futures right now, they've ticked up slight bit, from the correction that we saw yesterday. 0.1% gains coming in Dow Jones, S&P 500 is added 0.1%, while Nasdaq is very, very marginally higher. So it's basically after the correction, we do see a little bit of buying that's coming in, but largely it's a negative day of trade that we are penciling in, Ashesha.
Well, yes, negative day of trade that we are penciling in, but let's also take a look at what the crude market and the oil market is doing this morning. Remember, it is now trading near that $64 per barrel mark. It is down 1.5% in trade yesterday and today, and Brent crude ended with a decline of with an uptick of nearly 1.5% in trade yesterday. Now, as you mentioned, US President Donald Trump's attempts to annex Greenland has sent jitters through wider markets, and that is precisely the reason we are seeing volatility not only across equity markets but in the oil market as well. Crude also continues to remain under pressure from expectations that supply is likely to outpace demand this year, and that is also one of the reasons we have seen a sharp fall in crude oil prices over the last few months, and that is perhaps likely to accelerate going forward as well. But one important data point to watch out for will be International Energy Agency's monthly outlook, which is set to be released later on Wednesday. So any kind of outlook and any kind of commentary on demand-supply dynamics from the oil market will be very crucial to watch out for. So yes, Ankita, Brent crude at that $64 per barrel mark.
All right, so that's how crude is faring. But let's move on. All eyes are going to be on Donald Trump's speech at the Davos tonight, where geopolitics is expected to remain in the spotlight amid his rhetoric over trade, tariffs and Greenland. But ahead of that, he held a press conference to commemorate 1 year of his return to the White House, said he has done more for NATO than anyone in the history, but questioned whether the alliance would defend the United States in return. Now, Trump warned that while Washington spends heavily to support NATO allies, it cannot assume the same commitment back. Let's listen in to what he had to say.
I did more for NATO than any other person alive or dead. Nobody's done for NATO. And I think for the most part, they'll tell you that. I think you could ask the Secretary General about that, but he said it a lot. I've done more for NATO than anybody, and I see all this stuff, but NATO has to treat us fairly too. The big fear I have with NATO is we spend tremendous amounts of money with NATO, and I know we'll come to their rescue, but I just really do question whether or not they'll come to ours.
Meanwhile, US President Donald Trump also claimed that he helped avert a major escalation between India and Pakistan, saying tensions were close to turning nuclear. He also said that multiple aircrafts were shot down and credited his intervention with preventing large-scale loss of life, calling it part of his effort to end long-running global conflicts. Listen.
Ended 8 unendable wars in 10 months. These were unendable wars. Cambodia and Thailand fighting for years. Kosovo and Serbia. The Congo and Rwanda. Pakistan and India, they were really going at it. 8 planes shot down. They were going to go nuclear, in my opinion. The Prime Minister of Pakistan was here, And he said President Trump saved 10 million people and maybe much more than that. They're both nuclear countries. Israel and Iran, Egypt and Ethiopia were going to fight over a dam, and I got them to stop.
And well, he also said that he is uncertain how the Supreme Court will rule on his tariffs, warning that a loss could force the government to refund hundreds of billions of dollars already collected. Trump argued tariffs have boosted national security and government revenues and said repaying funds, if ordered, would be difficult without hurting people. Let's listen in.
We've taken in hundreds of billions of dollars, and if we lose that case, it's possible we're going to have to do the best we can in paying it back. I don't know how that's going to be done very easily without hurting a lot of people. But we're waiting for that case anxiously, and we have tremendous national security because of tariffs and tremendous income. You know, we have, and by the way, no inflation.
Meanwhile, French President Emmanuel Macron has blasted what he calls bullies at the World Economic Forum in Davos, urging the US to suspend tariffs on Europe. His remarks came after Trump threatened 200% tariffs on French wine over Greenland. Macron warned that the EU could be forced to deploy its anti-coercion instrument, calling such a scenario crazy, and argued that tariffs undermine stability, growth, and the rule of law.
And Danish pension fund is dumping U.S. treasuries, citing concerns over America's deteriorating public finances. The Accountiker Pay Pension says that it will sell around $100 million in the U.S. government bonds by the month end. The move comes amid rising geopolitical tensions over Greenland and follows a broader Sell America trade, with yields surging, stocks falling, and gold hitting record highs. Investors' fears are growing that the trade wars could spill into the capital wars.
And shifting focus then, US Senator Steve concludes India visit from January 17 to 19. He met with External Affairs Minister Dr. S. Jaishankar, Minister of Commerce and Industry Piyush Goyal, members of Parliament, and US and Indian business leaders. Discussions featured US-India defense cooperation, mutual efforts to secure supply chains, stable Indo-Pacific ties. Sumita Karir, my colleague, is now joining us with more details. Sumita?
That's right. U.S. Senator Steve Daines has just concluded his India visit from January 17th till 19th. He met with External Affairs Minister Dr. S. Jaishankar, the Minister of Commerce and Industry Piyush Goyal, along with members of Parliament and business members of the business community from Indian and United Nations businesses that are based in the U.S. In fact, Daines, amongst the several conversations that he'd had, he urged favorable pulse crop provisions in any future agreements between the United States and India, and he spoke with Indian leaders about that. In fact, in a quote that's been shared by the U.S. Embassy here in New Delhi, he stated that on behalf of Montana's pulse crop farmers, I appreciated Minister Goyal for listening to our farmers' concerns and will continue to work with President Trump to press this important priority. In fact, Senator Daines sought acceleration of the active and ongoing talks towards the conclusion of a fair and reciprocal bilateral trade deal. He also stated the discussions featured the U.S.-India defense cooperation, mutual efforts to secure supply chains, and of course asking for and trying for a stable Indo-Pacific. Later on, he spoke with representatives of the business community to highlight the many opportunities to deepen cooperation in advanced technologies and to expand trade and bilateral ties. Now, as far as the pulse crop provisions are concerned, this is a very, very important matter given the fact that it is concerning the agri community, and India has maintained very firm red lines as far as access to its agri, dairy and GM crop sectors is concerned. In fact, we've not opened this particular sector for any of the partners with whom we've done any kind of trade deals or FTAs. So this is a significant point that's been made by Senator Daines, and the fact that he communicated that to the Indian leaders as well. In fact, just a few days back, he had also written a letter urging President Trump to, of course, secure the interests of the farmers of the United States, particularly with respect to the state of Montana.
And with that, it's time for a quick breather. Don't go anywhere. We'll get you with more updates on the market on the other side. Stay tuned. Welcome back. You tune into Market Cafe. I'm Ankita and with me is Shesha, and we are going to take you through all the cues to watch out for before the start of the street. And for that, let's take check of how the Asian markets are faring right now. As of now, GIFT Nifty showing very flat moves, 38 points of an uptick coming in. So flat, but though in the green, which is, a bit of a surprise given the kind of massive sell-off that we saw coming in on the Wall Street, and even the Asian markets right now are trading in the red as a ripple effect of the entire Greenland rhetoric. The S&P ASX 200 right now is trading down 0.3%. Hang Seng is seeing cuts of 0.3%, again 90 points down. Shanghai is also down 0.2%, and Nikkei is seeing the sharpest fall, 235 points down, 0.4% cut coming in on Nikkei. Kospi is the only index that is in the green, just very marginally, 14 points uptick, 0.3% gain coming in as far as Kospi is concerned. But lastly, we see a sea of red coming in as far as the Asian markets are concerned, though GIFT Nifty is indicating a positive start, albeit very, very muted.
Okay, so that's as far as the Asian market is concerned. But as the countdown to the union budget begins, Deepa Sheshadri, partner Energy, Electricity, Resources and Industrials at Deloitte India, shares her expectations from this year's union budget. From policy support to growth drivers for the energy sector, she lays out what to watch out for. Let's go across and listening.
The industrial product and construction sector is entering the next phase of a capex-led growth cycle, where infrastructure, manufacturing and logistic investments are driving momentum. But outcomes will increasingly depend on execution capacity and fiscal credibility, not just allocations. As the sector looks ahead to FY27, the focus is on protecting capex continuity, improving speed of approvals and enabling supply-side competitiveness, especially as global trade frictions and compliance burdens rise. My expectation of the budgets are fourfold. First, industrial manufacturing. Expand the push for smart factories through continued schemes, easier credit access for MSMEs, and stronger skilling support for Industry 4.0 adoption. Second, engineering, construction, and infrastructure. Keep public capex structurally strong, but improve project selection and delivery through tighter monitoring outcome-led frameworks and faster time-bound clearances. Third, automotive and transportation equipment. Accelerate the EV transition by de-risking batteries and charging, using tax funding levers to improve reliability, scale domestic components, and strengthen the ecosystem. Finally, for electrical equipment and components, prioritize energy security by supporting renewables, storage and grid modernization, so that evacuation and reliability and clean energy supply chains can scale at pace. Overall, FY27 will be judged on whether it can keep the capex engine running while tightening credibility through better execution and targeted competitiveness measures.
And well, let's take you to Davos and what's happening there. Listen to Nadir Godrej, who's the chairperson of Godrej Industries Group at the World Economic Forum. We spoke to him. Let's go across and take a look at what he had to say.
Talk about years of leadership, years of conversation, and years of reflections as well. And I have with me someone over here who's been coming to Davos for over a decade. He's seen India evolve, he's seen the world evolve, and he's seen the World Economic Forum evolve as well. Nadir Godrej, welcome to ET Now. Thank you so much for your time. 10 years coming to this place. How does it feel? And where do you think from last 10 years, when the first time you came back in 90s to now, India's perception has evolved, Mr. Godrej?
It's evolved tremendously. And the presence of India at Davos has evolved a lot. And I was stunned when I went to the new India Pavilion, which is quite different from the last India Pavilion. And India is all over Davos, and the whole world is interested in India.
It is. But, you know, we're also living in very fragmented times because of all the geopolitics, etc. From your sort of leadership lens, do you think the world is headed into a better place as it gets more inclusive, or do you think things are going to get challenging and tougher?
I've always been an optimist, and for many years I think the world was getting in a better and better place steadily. But today I was in a session where somebody called himself a cautious optimist. So from being a bright optimist, I've become a cautious optimist.
I understand. But tell me about, you know, the Godrej Group in that sense has been an early mover, if I can call it, when it comes to sustainability. There is so much talk around sustainability, climate protection. Tell me, in today's volatile environment, how do you convince shareholders that ESG is not a cost center, but it's something which is a must-do?
Right. We've always felt that corporate social responsibility is very important. And in our group, we had a long-standing feeling for that. My grandfather bought land in Vikhroli just so that he could provide housing, because once he went to the house of one of his workers and he was shocked where he was living.
Yeah.
And everyone thought he was mad to buy land so far away from the center of the city.
But look how prosperous it is now. Yeah.
So I always feel that corporate social responsibility pays for itself. This is a totally unexpected consequence of his good actions, but there are many others. Society likes it when you're corporately social responsibility. Financial institutions like it. Corporate social responsibility is all about long-term thinking, because you make short-term sacrifices, but you get huge long-term benefits. You get the trust of society. And in 2010, in Godrej Industries, we started a Good and Green program. We took bold goals on carbon emissions, water use, solid waste, and then a few years later, we had compulsory corporate social responsibility. Now, this looks like a burden, but it's actually only 2% of your profit, and you can use it in a way that benefits society and benefits the business. Michael Porter had this idea of shared value. So you do something for society, which also helps you. Apart from the fact that all the goodwill you get in society is anyway helping you.
I have to talk about the India consumption piece right now. Given the kind of reforms that the government has taken, of everything from GST rationalization or further rationalization to labor codes, do you think all of it in some way will sort of propel demand? And can you really see that already on ground?
Yes, we can see that on ground. Immediately after GST, there was a little bit of a problem because people were destocking. But already we see a pickup in demand because many items have lower GST rates, and that always helps. And we hope that in this budget also the government will lower some taxes. Ideally, they should do it in a manner so that the lower taxes results in more sales and no loss of revenue. So businesses benefit, the government benefits, society benefits. People get cheaper goods. These kind of win-win solutions will help the economy to continue to grow. And today, Chandrababu Naidu was talking about getting the growth into double digits.
Understood. So let's talk about, the consumption story. And do you sense that the recovery is at least getting close to broad-based, or is it still very sort of bifurcated, urban versus rural? When is it that we see a more linear, flatline kind of recovery?
There are times when the urban economy grows well. There are other times when the rural economy grows well. The rural economy depends a lot on the monsoon or floods. This year we had a lot of rain, but many crops got flooded. But the rabi crops are usually very good because they are not directly dependent on the monsoon, and a good monsoon means a good rabi crop.
So if you had to give one message to Indian entrepreneurs today who are just starting out, and we're seeing so many micro entrepreneurs coming up in India in every nook and corner, what would that message be?
That message would be focus on technology. There are lots of startups who are doing very good technology, and don't forget your corporate social responsibility. You may think that it's unimportant for you at this stage, but it always pays for itself. Don't think it's a cost. What goes around comes around.
Okay, Mr. Godrej, on that note, thank you so much for speaking with us.
Thank you, Aisha.
And let's keep it going with the World Economic Forum then. And on the sidelines of the World Economic Forum in Davos, we also spoke to Nilaya Verma and Charu Malhotra from Primus Partners, who stressed that execution with speed is critical, infrastructure must be planned for the next 2 decades, and private sector capacity needs urgent expansion. Listen in to a slice of that conversation.
The conversation that we're having in the context of India, the innovation that many of our companies are bringing and talking about deals, I think that's really, really, as one of my clients put in, everybody has something to learn and something to teach, and that's what Davos is all about.
Charu, India's pitching itself. Nilay, if you could just give her the mic. Okay. India is pitching itself as the world's fastest growing economy. We've seen the India presence here at Davos, and you can't miss that for sure. Tell me, where do you see the biggest execution hurdle? And at the same time, where do you think India can be in, say, a year from now to position itself as the largest growing economy in the world?
Well, we've been on the sidebars. We've also been seeing various discussions on MOUs and collabs happening. The biggest hurdle would be in terms of taking this intent, the policy intent. We see several states here. There are 10 states, or 10 odd states from India. And the biggest hurdle, or let's say the delaying factor, would be if it's not executed with speed. And the second is if we miss the requirement in terms of sectors. We're talking about AI, and there's Davos is, today talking about AI, quantum, data. We're talking about climate. We're talking about climate. We're talking about clean energy here. And very importantly, we've seen discussions manifold on unlocking new sources of income, and not just for any one strata, but across inclusively. If some of these conversations which we have been hearing and been part of, if even a fraction of them actually unfold very quickly, even before the next Davos, I think that would be a great achievement for India here.
Nilay, from a data and policy lens, what's the single biggest sort of reform lever that India can pull off right now?
Yeah. Before I answer that, can I just add on to what Charu said? I think very important points, 2 things I wanted to add. I honestly think our infrastructure, and we've been doing very well in infrastructure, but we reached a point that we need to plan for the next 20 years.
Yeah.
Our cities, in particular, we need large number of new cities because our current urban infrastructure cannot support the kind of growth that we need. And second, I would say, is capacity. Of capacity, not just in the public sector, but also in the private sector.
Yeah.
Let's just take about infrastructure. If we were to build the kind of infrastructure that we need, we do not have the private sector capacity or equipments to build that. So I think those are 2 additional points that we need to really work upon. I think data, when you talk about it, and in the context of policy, that's gold. That's really gold, because end of the day, you cannot have because when you take policy at a federal level or a state level, it impacts millions and billions of people, and therefore all our policy has to be data-led. And I think that's an area that we can do much more, because very often when we are building policies, we tend to focus maybe very minutely on a broader objective as opposed to what the data is suggesting. We also advise a number of clients across sectors, and one of the challenges that clients, especially outside of India, would say is that you've taken a decision without consulting us. Yeah, and that's something that we've heard here in Davos. It was said in the context of some new age technologies, but I think we're still doing well, but there's always scope for improvement. investment.
So in the very near term, and if I could get myopic here, what do you think are the step 1, 2, 3 that India needs to sort of execute to be able to come up at par with what the globe is doing in terms of advent into AI?
Yeah, I think we can take leadership. You know, AI outside of India, in my view, is very focused on private sector and commercial interest. But AI for public sector and for good is something that India can lead upon. I think there's a huge amount of opportunity for AI, for governance, and that's something that India can clearly do. We would need a large number of people, you know, while yes, AI does impact jobs, the kind of jobs, but it also would require a different kind of people, more creative. And we're anyway entering the world of creative economy. So again, that's the second thing that we need to really work upon. And third, in the long run, sovereignty of our data. And because end of the day, we are an interconnected world, and yet we can't let somebody else drive that. So I think a move towards, you know, creating air-gapped systems, you know, what we broadly call sovereignty of data, will come into play.
Also, let's go across and listen in to Natalie Pierce, head of Global Shapers Community World Economic Forum, and see what she had to say.
We're here at the World Economic Forum and we're here at the Congress Center. There's a lot of talk about what countries need to do, what the world needs to do at large. But what about the youth? What are they thinking about? What are they talking about? What are their challenges and what are they working on? And what is it that they need to work on? And who better than Natalie Pierce, head of Global Shapers Community here at the World Economic Forum, joining me today to talk about exactly that. Natalie, great to have you on the show.
Thank you so
much. The youth, no one's talking about them. What do they need to do? And what are they worried about right now?
Well, I have to challenge that narrative a little bit because that's my job.
Yes,
I work,
yes.
I work at the World Economic Forum, particularly on our institution's youth strategy. So here in Davos this week, we have 40 young change makers who are participating in the convenings to make sure that the youth agenda is at the forefront of world leaders' minds this week. They belong to the community of global shapers, 10,000 young change makers around the world who want to make a difference in their communities and who want to drive forward global agendas. So youth are here. They're going to be loud this week.
And they will be heard, thanks to you.
I hope so.
So what do they want as a message to go across to the world leaders present here?
In our Youth Pulse report, we asked them across multiple dimensions, from the economic outlook to the political outlook, social, technological, and climate. So maybe let's talk about what's on the forefront of many people's minds, the economic outlook. We asked young people, what are the key economic trends for 2026 and beyond that are on their minds? At the forefront, half of all global respondents, half of all global respondents said the key economic trend shaping the future for young people is going to be inequality. So on the forefronts of their mind, they feel like this may be the generation that's not going to be as well off as their parents. They feel like the social contract may be broken, that progress may be halted for their generation. So for millennials and Gen Z, there's economic worry and there's stress. But on the flip side, there's also optimism. In Southeast Asia, in Africa, the key economic trend actually wasn't inequality. In these specific regions, there was more hope and optimism. There was a focus on entrepreneurship as being the great equalizer for young people, creating their own pathways into economic prosperity, their own pathways into careers and jobs, and feeling the sense of agency and autonomy over their economic future.
So that's very interesting that you talk about that they're worrying about whether they're going to be as economically well off as their previous generations. What does that fear emerge out of? Is it because of job insecurity? Is it about skilling? What is it that they think is the real reason as to why there is so much disparity in the world?
I think for this generation, there's a few angles to talk about. One, you mentioned it. I think their biggest concern is equitable pathways into meaningful employment. And what we're seeing across many industries is a rollback of entry-level careers. This week, we'll be talking, of course, about what's the impact of AI on early career functions.
I was going to come to that, yeah.
So I think this entry into jobs, into decent work, into well-paid work is really the top concern. The second concern, and we see this in the findings of our report, is really about quality education, and quality education that is aligned with labor market demand. So what I study is that what's going to actually be
of use and make me money.
A source of employment. And then the third concern that we see, of course, is making sure that we have access to affordable housing and financial security. And I think what young people are saying is you need to have a decent job to live and to work, and you need to be able to afford where you live. And that is really what's at the core of progress for this generation. But of course, we can also talk about climate concerns. We can talk about the action they want to see socially. So there's a lot, I think, on the youth agenda.
Right. But, you know, since you did talk about AI, Natalie, you know, the question really is, what is the youth, or rather, how is the youth thinking about AI? While it does make them productive, are they not confident that AI is actually going to skill them better for the future?
This is the crux of the AI question, right?
It is.
Its impact on young people. So first and foremost, I think we surveyed 5,000 young people across 100 countries. One piece of data that I found resounding, over 60% of the young people we surveyed, regardless of region, industry, background, are already using AI in their daily lives. So young people are really at the forefront of that technological transformation. They're utilizing it, they're designing it, they're making sure that it works in their daily lives and for their needs. But there's a tremendous amount of skepticism and concern.
That's the latest coming in from the World Economic Forum in Davos, and you can please continue watching the entire coverage only on ET Now. But shifting focus back to Indian equity markets then, and let's take a look at all the stocks that will be in focus today. A whole host of stocks will also be in focus on the back of their third quarter results. Meryl, my colleague, is now joining us with all the stocks that you need to watch out for. Meryl, morning.
Good morning. Well, yes, here's a list of stocks that are on our radar today. Starting up first with Persistent Systems. The company's seen quite a strong quarter, but their PAT has taken a hit of around 7% quarter on quarter on the back of the new labor codes, but has still beat street estimates. Building to that is AU Small Finance Bank, with their net interest incomes up almost 15% on a year-on-year basis, and their asset quality as well seeing an improvement this quarter. Vikram Solar as well has seen a good quarter, with their consolidated profits up almost 5.2 times, and their EBITDA margins are almost 1,000 basis points higher this year. Their order book as of the 31st December 2025 standing at 10.6 gigawatts. Next up is Supreme Petrochem, a little bit of a weaker quarter on this front, with their consolidated PATs down almost 37% on a quarterly basis due to margin compression seen this quarter. Next up is Shoppers Stop, also a weak quarter for them amid festive weakness. Their consolidated profits stood almost 70% lower on a year-on-year basis. United Spirits, on the other hand, has had a mixed quarter, with their volumes down almost 3.2% year-on-year, but price mix has held on strong, and their profit is steady, up almost 12% on a year-on-year basis. Sai and DLM, with their revenues down almost 31% year-on-year, but their Q3 PAT and margin growth has missed estimates due to the one-time M&A cost and labor code impact hitting the numbers.
All right, Meryl, thank you so much for joining us with all the numbers. Let's go across to my colleague Rabinder, also standing by with more stocks that you need to watch out for before the start of D Street. Rabinder, take us through all the stocks.
Well, as from the QSR space, restaurant brand Asia can be in focus, where Inspira Global to acquire a controlling stake of 11.26% from QSR Asia for 70 per share for 460 crore, and Inspira Global to infuse additional 900 crore via equity and 600 crore via warrant. So back of this, restaurant brand Asia can be in focus. JSW Steel can be in focus, where CCI has approved merger of Bhushan Power and Steel Limited with JSW Sambalpur Steel, JFE Steel Corp and JSW Kalinga Steel. So back of this CCI approval, this stock can be in focus. Another steel stock, Tata Steel, can be in focus, where CCI has approved acquisition of 50% equity share of Triveni Pallets Private Limited by the Tata Steel Limited. Bazaar style retail can be in focus, where board has approved issuing 1 crore warrants to Cupid Limited at 328.25 per share, raising approximately 331 crore. Power Grid Corporation of India can be in action, where board has approved 914 crore capex for spare transformer reactors across region. So back of this, Power Grid can be in focus. SRF can be in action, where board has approved 180 crore capex for new pharma intermediate plant at Dahej. And JSW Energy can be in focus, where subsidiary has signed PPA for a 1,600 megawatt thermal plant in West Bengal. And on the back of order win, Pace Digitech can be in focus, where company subsidiary has won a order of rupees 94.3 crore from the BSNL for Leon batteries. And lastly, Hindustan Zinc can be in focus, where board to consider NCD fundraise on January 23. So back of this, Hindustan Zinc can be in focus.
Okay, so a whole host of stocks in focus, either on the back of news or on the back of earnings. Rabinder, thanks so much for joining us with all those details. With that, we need to slip into a very short break, but more news and updates will continue on the other side. Don't go anywhere. Welcome back. You're still tuned into Market Cafe right here on Nifty now, and turning out to be a soft start. Looks like it will be a soft start for Indian equity markets. But let's go across and listen in to Pranav Adani, MD Agro, Oil and Gas at Adani Group at the World Economic Forum in Davos.
Well, I'm here on the sidelines of the World Economic Forum in Davos in Switzerland. And who do I have with me? Pranav Adani himself. He's been very, very busy here signing MOUs, firstly with the Maharashtra government. Pranav, welcome to ET Now. Thank you so much for your time. So tell us about this MOU that you've signed with Maharashtra.
Thank you. Thank you for having me over. The MOU that we just signed with the state of Maharashtra is of 6 lakh crores. I think it's one of the largest MOUs signed for the state, but this is all across our different sectors at the Adani Group, starting all the way from urban infrastructure development to data centers, to renewable energies, to arenas and coal gasification. So these are all the different sectors that we are going to invest over the next 7 to 10 years.
Wow. And any other MOUs? This is just one leg of it, Maharashtra.
Yeah, today we are also planning to sign an MOU with the state of Assam.
Okay.
Yes.
And what regions is that investment going to be in?
Largely going to be across airports, defense and cement.
Pranav, have to ask you this. Energy transition is such a hot topic in the world today, and it's part of all and every conversation here at Davos. It's a recurring theme. What's your own vision on where energy transition is going to be in the next 5 years from now?
See, very clearly, Aisha, as we see that, things are moving towards renewable energy. In fact, one of the MOUs that we signed with the state of Maharashtra is also on renewable energies in a very large scale. So that is the theme right now across the globe. It's just we have to see that how to balance the base load as well as the renewable. But I think the way now infrastructure is shaping out, I think the way to go is going to be renewables, and of course there's a large energy transition along that across all states in India.
Talking about the India view, and correct me if I'm wrong here, capital seems to be getting a little cautious, and it's also seemingly getting costlier as well. Are global investors more convinced about deploying money into the global south and India being part of it?
No, you got a point. You're right over there. But I think, having said that, today, India with its demographics that we have, with 1.4 billion people, the youngest population that we have, I think every sector is going to attract capital globally. In fact, again, talking about Maharashtra, what we were talking about with CM Devendra Fadnavis was the same thing. The amount of FDI that is going to come in. Because see, don't forget that all these sectors are looking at coming into India. So for example, if you were to take data centers, all the global names are wanting to come in the data center. If you look at coal gasification, the technology is going to be also important. So while it's going to create a lot of jobs, it is going to have a lot of capital inflows coming into India, I feel.
Pranav, geopolitics is also getting very fragmented, and that's sort of fragmenting trade routes as well. Does that strengthen India's case as a global hub, or is it sort of complicating execution for, conglomerates such as you?
No, that's a very good point. It's how we are placed as India is very important. How to take opportunity. While of course this is a sad thing, the geopolitical what we're seeing globally, every day is a new day. But I think the way India is placed, looking at its own domestic market, I think India is very well placed for this, and I think this is the most opportune time that India should take advantage of this, because when world is not sure where to invest, is confused, India is a safe zone. So I think we are very bullish on India, let's put it that way.
Pranav, you're a Davos pro, and the theme this time around at Davos is spirit of dialogue. What's that one message that you are keen that global investors and conglomerates take away from the Adani Group?
No, so the theme is very apt, collaboration and communication really. So I think, whether it's geopolitical issues or whether it's business, what really matters is collaboration and communication. So I think that is something that I think we should take away from here. And, the whole year, this is going to be the theme now, because Davos sets the theme. So
It sure does. So any exciting meetings that you've had?
They're all internal meetings. So
Okay, you're not going to divulge that on camera. So quite excited to ask you, at the Adani Group, what's the newest baby that you're working on, and what are you personally excited about?
No, I think the sectors that we are in, really infrastructure, energy, of course, urban infrastructure. These are the businesses, defense, and so I think every sector that we are in is got a lot of opportunity coming our way. So every day is a new day, but we are now looking at also manufacturing, defense, like I said. So yeah.
So defense is it. So I have to ask you, what's a day in a life of Pranav Adani when he's not working, if he's ever not working, like? How do you peace out?
Just travel with the family, and that's about it.
Okay, great. And AI is the hot topic. Everyone's been talking about what apps do they use for productivity. What does Pranav Adani most often frequent?
Oh, I think right now it's all got to be ChatGPT.
ChatGPT. Okay, Pranav, great to have you today on ET
Thank
Now.
you very much.
Thank you so much for your time.
And well, we'll get you more from the Davos diaries through the day. But let's move on then. Eternal is expected to deliver a good set of numbers in its Q3 results, with its major focus on GOB growth and Blinkit store addition. My colleague Sneha is now joining us with what to expect from Eternal's numbers.
Overall, on a consolidated basis, we're expecting to see a healthy set of numbers coming in from Eternal. Revenue is expected at 16,223 crores, an uptick of 19.5% on a sequential basis. Net profit expected to jump a whole lot of 75% on a sequential basis. EBITDA is seen going up by 49%. EBITDA margins this time too are seen expanding at 2% compared to 1.6% quarter on quarter. So overall, we're expecting a healthy set of numbers. Segment-wise, Blinkit is expected to do very well. Expected to clock in about 26% growth. Revenue growth for Blinkit on a sequential basis. Food delivery nominal growth of 2%. Hyperpure is also seen growing 2%, but the going out business is expected to do well with a 36% sequential uptick. Talking about the food delivery and quick commerce space in particular, let's first talk about food delivery. The NOV is seen at about 9,710 crores, going up 3%. Contribution margin as percentage of NOV is seen flat at 10.5%, but the adjusted EBITDA as percentage of NOV is seen at about 5.5% sequentially. For Blinkit, the NOV is expected to go up by 15% on a sequential basis and 123% on a year-on-year basis. So Blinkit could be the real growth driver this time around for Eternal. Their adjusted EBITDA margin as percentage of NOV is also seen decreasing to minus 1.1% compared to minus 1.3%. So that adjusted EBITDA loss is expected to decrease as well. Lastly, when the numbers do come out later today, watch out for any commentary on food delivery NOV growth, any comments on the 10-minute model for Blinkit, any rollout if rollback if they've undertaken that, any comments on if there has been any impact of the strike that we saw, 2 days of strike in December, if that has impacted Q3 earnings, and about of course about the competition and the competitive scenario now that Zepto is also expected to list this year. If they have any comments on that, will be key to watch out for. But yes, overall we're expecting a healthy set of numbers from Eternal this time around. Okay, so we are expecting healthy set of numbers from Eternal. Snehi, thanks so much for joining us with all those details. But shifting focus to the pharma sector then, Dr. Reddy's Laboratories is in focus ahead of its results today. Meryl, my colleague, is now joining us to take us through what we should expect from Dr. Reddy's numbers this time. Meryl?
Well, yes, Dr. Reddy's is announcing its third quarter results soon. So let's take a look at what the street is penciling in terms of expectations. So they're expecting that revenues will be marginally down on a year-on-year basis, with EBITDA and PAT both expected to take a 20% hit on a year-on-year basis. Now this hit is coming from mainly North America sales being down and a much lower contribution coming in from G Revlimid, along with the pricing pressure and erosion in the base business. Now where we're actually seeing growth is in the Russia business, where growth is mainly led by volumes and partially offset by ruble depreciation. Also seeing growth is the EU business, with growth led by nicotine replacement therapy portfolio gaining traction. So here's a few key factors to track in the upcoming result. First off will be semaglutide update, mainly on the Canada launch, and since the launch was delayed previously, and also will be on the India roll-out timeline and the impact from the ever-increasing competition in this space. Another key factor to track will be the ex-US business growth, which was expected to remain in the double digits, and also will be R&D as a percentage of sales, which was expected to stay around 7% levels, down from their previous growth trajectory of 8 to 9% levels. These will be a few key factors to track in the upcoming result of Dr. Reddy's.
All right, Mel, thank you so much for that. But we're completely timed out on this edition of Market Cafe. Ashish and I will take your leave. Thank you so much for tuning in. Don't go anywhere because the market is going to take the market action forward.